Do you know that using a wrong stockbroker could make you pay 10 times more tax or even 100 times more? Let's find out. Assume that we buy 100 shares of SLV at $10 for each share. On the second day, we buy another 100 shares of SLV at $20 per share. On the third day, we sell 100 shares of SLV at 19. So on the third day, we have a position. We are holding 100 shares of SLV because we have bought 200 shares. We just sold 100 shares, so we are still holding 100 shares. If we use Robinhood, we have a realized gain of $900. Why is that? Because Robinhood makes you sell the first lot of your 100 shares. When you sell the 100 shares on day 3, you have sold the first 100 shares, which you bought at $10. So for each share, you have gained $9. 100 shares, $900. We have an unrealized loss, minus 100. On day 3, we sold the first slot, so we are still holding the 100 shares, which comes from the second day. So the cost basis of the 100 shares is $20. Assume that the current market price is 19. So for each share, 20 minus 19 equals 1. So for each share, you are losing $1. So the unrealized loss is minus 100. This is really bad because in the next year, when you file tax return, you have a realized gain $900, but you cannot claim you unrealized the loss. How about using another broker? If we use TD Ameritrade, we can have a realized loss minus $100. The reason is that when we sell the 100 shares, we don't have to sell the 100 shares we bought on day 1. We can sell the second lot of 100 shares of SLV. So we bought them at 20, we sold them at 19. So that's why we have a realized loss. So this is amazing. You can choose whatever lot you want to sell, whichever has the highest cost basis. And we have an unrealized gain because we are still holding 100 shares. These 100 shares are from the lot we bought on day 1. So we have the cost basis at $10. This is perfect. TD Ameritrade can automatically select the highest cost basis, meaning that you don't have to memorize on which day you bought how many shares, what the cost basis were. If you go to TD Ameritrade website, you can select the tax lot method. So Robinhood uses the first in, first out order. When Robinhood sells your shares, it just selects the oldest lot that you bought the shares. And TD Ameritrade, you can choose to use this method, tax-efficient loss harvester. So in this way, the broker can auto-select whichever is the highest cost basis. If we use another broker, how about Fidelity? The bad thing is that we have to manually select the cost basis. Fidelity does not offer a way to automatically select the highest cost basis. You have to memorize when you bought how many shares, at what price. It's difficult to memorize all these things. In the future videos, I will show you how to save tax when you trade options. If you like this video, remember to click the like button and subscribe.